Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. It's Victor here. This week, sort of quiet week after last week. Rise up and down of the market with the UK going into to the poll, and obviously the election went really well over here, and then this week suddenly really quiet. I mean, there's only a couple of things to talk about on this week before I go to onto my weekly sample update. But basically, of course, there's this Trump impeachment process being going through in US at the moment. And obviously, President Trump is not very happy about it. And but if you actually listen to what actually said, and then you stand back and think from outsider point of view, I mean, when people from America found other government come in and try to fiddle with things, with his own policy or his own try to manipulate how the policy things like by part of the election. This is what happened. Got Trump into trouble by asking another country's leader to look into to investigate his possible Poland's son's activities in another country. Those kind of things. It's like okay, if somebody like Russia, for example, have maybe some shadow or some little bit of what you call movement to try to change the influence the U.S. Election, and the U.S. government and different houses just jump up and down. But it's just funny if you from an outsider point of view look at this and then say, hey, look at what U.S. in general have done to Latin America and how they actually try to force other countries to do things. In this case, in U.S. and Chinese trade and things like that, to try to do, force them to do other stuff. What do? Nobody jump up and down in the government. They all just, they all very quiet. Latin America is like, is from what I know of what I read is U.S. have basically gone and tell the Latin American countries what to do or threaten them what to do with things for quite often, what's happening all the time. So it's quite surprised what if you from outside U.S. and think of what is actually happening in the politics in U.S. is quite in a way quite fascinating. The other thing is, of course, UK gone to election last week. Everything gone fine. The pound was really strong, and then this week, boom! Seems to have gas just let out his bag, and just everything come down. But I think last week what happened personally, I feel is overshoot quite a bit. Both the US dollar, British pounds against US dollar against the Japanese yen, it's gone up quite a bit, and also against the euro as well. So basically, this week is just snap back to normalcy and back to normal position. And I think this week really is this coming week is a good place to actually go in to get something going here. I will talk about it in my sample trade later. And last but not least, just U.S.-China trade continue. There's not much details there, and I personally feel there's no way in hell there's any signing of that and first phase memorandum, whatever you call it, to by end of January, because end of January is Chinese New Year, and we are Christmas now. The time New Year come back with like 2 weeks or so before Chinese New Year so happen, and try to get everything all organized. Or some Chinese officials say come or fly over the U.S. To do some signing. I'm not sure. I doubt about that one. Basically, the Chinese New Year here, you don't, big boys in China is not going to travel much. You could probably stay in China and get ready for the Chinese New Year celebration. That's just my view. Okay, so that's not much to say this week about the stock market in general, but here is the sample trades here. First of all, Apple has been quite solid and it's doing pretty well as usual. And basically, medium, long term, and short term is all buy. Not much happening here. Amazon is a bit well, side trade again. It's up and down, and a bit volatile. Basically, try to find its feet. Try to say determine if it's want to go up or go down. But it looks like just continue side trade. So, short term it has gone to buy from sell last week. Medium term is neutral. Long term is from sell back to neutral. So you can see it's just quite volatile. The Australian dollars against the USD is buy short term, medium term, and neutral long term. But this one, I think I said something like last week about it already. That is a slight, uptrend coming out from other currency against US dollar. So Australian dollar against USD is coming up slowly. So I think, well, it's just a common theme from the chart that seems to show the case. So it's not just the British pounds against the US dollar is moving ahead. Euro as well as Australian dollars are both trying to move up. Okay, so next is Brent crude. As before, is to me it's a sideways trade again, but from what I track, it basically is short, medium term. Is neutral. Short term is buy. Long term is buy. It tried to break out, above the 20-point average and stay there at the moment, but it's not doing much. It's relatively hovering around there. So I mean, it is still trying to find its direction, so to speak. I mean, in the background there is of course the slowdown of the entire world trade, with dispute between U.S. and China not helping anything, and IMF already said around the world the growth is going to be slow, sluggish, and those trade tariffs around the world is not helping. So the Brent crude is, or any crude oil in general, is not going to do much as far as I'm concerned. But it's like a quiet up at the moment. Going sideways, just try to move up a little bit at a time. Not much happening, but one thing to watch out for anyway, from my experience, any quiet market, you don't watch it. Every so often they have some funny thing going on and suddenly just shut up either up or down out of that sideways trade channel, where nobody's looking. So I would basically keep track of this and tell you that some big things happen, but just watch out. For crude oil is the same. So just now it's Brent crude and crude oil in general. So it is a let's see, it's a buy for short term, and for crude oil anyway. The medium term is also a buy. Long term is a buy. Next is DAX, and it's relatively continuing its uptrend. Is wobble a bit. I think a top may be forming or just going sideways, but long, medium, and short term is all a buy. Dow Jones similarly is similar stuff. Dow Jones has been basically, all the three major U.S. indices going up. So if nothing much happened, you got impeachment of U.S. president, and the market don't seems to think anything of it. Just like business as usual, just going up. So nothing seems to be happening affecting the stock market. FTSE basically continued the election uptrend here. Unlike the British pound, hasn't done any retracement or whatever. So that's just how it is. You think the stock market might be very much related to this currency in UK anyway, and yet the currency doing one thing, the index is doing something else. So it's quite a different track basically. That's just life. So in for FTSE, short term, medium term, long term, all gone to buy for now. So it's all doing well, pretty good. Basically for next is gold. Short term is sell, medium term is neutral, long term is buy now. So it's slowly trying to get above the 200 moving average. So it's slowly getting there. Next is Hang Seng, Hong Kong index. This one I keep track all the time, and it's going sideways at the moment, but it's a sideways channel. Touches is upper ceiling, so to speak. So there's some sort of resistance over there, but it's above 200 days moving average, so it's quite. So short term is a buy, medium term is a buy, long term is a buy. So it seems I don't know, some of the U.S. upward movements above in Hong Kong, but not quite sure here. I mean, the channel's going through what it is, so it looks like it could be. I mean, some I don't know, some downward movement may be coming up if the channel holds, but who knows? As far as I'm concerned, I mean, this is one thing we need to learn, is I don't have a predefined view of what the market should be. Even you see there's a lot of support and resistance line or whatever, Fibonacci support, whatever targets. The market just go to do its things. Whatever you think is irrelevant. We should trade what we see. We should not trade what we thought should happen. Okay, it should be just straightforward trading. It's just basically a numbers game. If you're against your system say go in, then go in. If you're not, then get out. Don't think, don't have this predefined notion that you have to always be what you think is right will always happen in the market, because everybody else in the market do the same. So the market in general is very much a random event, and you can never guess who else on the other side of the table have an exactly opposite view of yours and have much bigger pockets, and we move the market the other way very much in your displeasure. And so you remember this rule: trade what you see, not what you think. Okay, so next is Nasdaq, and as usual is just buy across the board basically. Not as volatile Dow Jones, but Nasdaq is just basically going up and up. So it's pretty well here. After this is Nikkei 225. The Japanese index again is up all the way, so no problem. Silver is next. So Nikkei is long term, medium, short term is all buy. So it's Nasdaq, okay, up long term, medium term, long term, short term. And silver, short term is a sell, medium term is neutral, long term is neutral. So not much happening, just very much like gold, just basically very much doing a sideways trade until something happens. Next is US dollar against the Chinese yuan, and short term is a sell, medium term is a sell, and long term is neutral at the moment. So nothing much happening here. Next is Japanese USD against Japanese yen. This one again is quite volatile lately, gone up and down, trying to find its feet. But it's, as far as I'm concerned, it's buy short term, medium term, long term. So it's going there, but it's very much like, from a charting point of view. If you look at the chart itself, it's a rising wedge. Slowly. It's not a big wedge, it's a small wedge, but it's been in there since middle of August, and just slowly going up. So this rising wedge channel is just up and down, and the price seems to, this index seems, this cross seems to stay around 109.50 area, and around 108.50, that kind of, so up, down, and down, doing not much. So nothing much happens until really things go one way or another. Next is basically the British pound against the Japanese yen, and also against the US dollar. Both of them, short, medium, and long term, are still short term is sell for both of them. Medium and long term still buy. Obviously, this week, this volatile market just the price just come down, but it's very close to the 50-day moving average on both of these crosses, and so I think if it's close to that, I think it's a buy. So for British pound against the Japanese yen, that is around 141, and for British pound against USD, that's around $129.50, $1.29.50 area. So if that happens, it touches, and just basically, I always recommend get some, and it should bounce off by the 50-day moving average. But if it doesn't, then get out. As to me anyway, this at the moment, this current setup for British pounds against US dollar and British pound against Japanese yen is a good trade for a bounce back. But the trend following system, it says, is a sell, but my long-term system, which based on the moving averages, is basically, from my experience, that represent a very low risk trade, and because the 50-day moving average is so close to whatever current price is for these both currency pairs, and you risk very little just to find things out. So this is how I normally test it. It's very much like going to a bath. You have a long hot bath, yeah. Most people have it. What do you do in the first place when you have a bath already? When you test your hands, if all the water is fine, you don't just jump in there, because the other part of your body, the skin is much more, softer than your fingers and your hands. So what you do is you tip your toe down a little bit, add a bit of water. If it doesn't feel right, tip your toes in a bit, put your lower legs in, add a bit more water if it's too hot, and so forth. You repeat the process until you're happy, and then you put your butt on it into the water and have your bath. So it's a slowly testing process. So you treat it as a probe. You go in the market and say, okay, this looks relatively, for a long-term trade, well, my long-term system, as far as I'm concerned, is a relatively safe bet that there could be a bounce. But this is just my view. The market might totally do different things. So what I do in this case, I just put it into the probe. I just buy from things very small on this one. So if the trend following system, the short-term trend following systems is correct, the price continue to go down, and broke the 50-day moving out just fine. For me, I just get out. And I basically find that just a little probe just to find out. But if it stay there, then that means the 50-day moving average is strong and it's providing support, and the price will just bounce off. For a very strong share or currency or index, whatever, and they're strong, you should see the 50 days moving average to be quite a strong support area. So as far as I'm concerned, British pounds, after the election, we've given the Conservative government 80 seat majority. It has its capability to basically bulldoze any rejection about Brexit, and it's definitely going to Britain is definitely coming out of EU by end of January, and probably negotiate itself whatever terms that he wants to with the EU. If EU say no or etc. British government has enough majority seat to basically bulldoze everything and just move ahead. And so this is good for the market as far as I'm concerned, because it removes uncertainty. Basically, we know the government, the Conservative government in UK is just going to do something, and you definitely go into Brexit and just move forward, and doesn't really care what EU go to think, whatever. And as far as I'm concerned, it's a loss for EU because apart from France and Germany, UK is one of the biggest contributor to the finances of the overall EU pack, and with Britain outside, also with the dominance with the financial market, I don't think EU can have much to say about British if we want to come out. And of course, EU will try to sting Britain with a very big, hefty divorce bill, so to speak. Ask them to get 12 billion or 15 billion, whatever it is. To pay back or so ever, the severance package, so to speak. But Britain will just pay it and just move forward, because I think we'll be a positive, definitely Brexit for British pounds. But short-term wise, this year especially, it's been up and down. There's a lot of uncertainty now. At the end of the year, things are a little clearer. I think next year, 2020, we'll just move ahead, full steam ahead with Britain, moving away out of EU, and there will be some volatility. So I will continue to stay with this pair, but I think long-term views, like after beyond 2020, British pounds should go up, continue, just reflecting the possibility of what Britain can do trade-wise with other parts of the world, with US as well as other Asian countries, so to speak. So this is just my 2 cents. What I may be totally wrong, but as far as this is my view for next year. But my system might tell me something else. So I trade a system, not my view. My view could be wrong. So, but here definitely is a possible good, very small losses to actually find out if the 50-day moving average holds for these two pairs, and with these, then just good way to move forward and then build yourself some get yourself some money, build yourself some trade. So that's the end of the podcast for today, and I hope you like it. Thank you, and speak to you soon. Bye.